Welcome back to the deep dive. So our mission today is to take this really dense stack of sources we've got and turn all the detail on the European EV market into, well, pure actionable insight for you.
And it's a critical mission, really, because what we're looking at here, this isn't some story of stable, predictable growth. No, we are strapping in for a deep dive into what you could only call genuine market share carnage.
That's right. The sources you've shared, they track the trajectory of 13 key European countries across this really high-stakes period. And the core narrative seems to be that the companies that pioneered the market, the ones we celebrate as first movers, their foundations have just crumbled.
Absolutely. And at the same time, established giants pulled off this historic surge. The hook here is pretty simple. The pioneer advantage was just rapidly and violently eroded. So we need to focus on not just who won and lost, but the why, the underlying strategic decisions that caused these shifts.
Okay, let's unpack this with the first, and I think most shocking casualty.
Yeah.
We have to start with the groups that suffered the most drastic declines. I mean, the undisputed former EV champion was the Renault-Nissan-Mitsubishi Alliance.
Oh, a total strategic collapse. And it happened so fast. The data we have shows that around 2017, this alliance held just a crushing market share of, what was it, 39.4%?
39.4. They were the uncontested kings with cars like the Renault ZOE and the Nissan Leaf.
They were.
But if we fast forward to the Q4 2025 projections, that share has it's plummeted to only 6%. We're talking about a jaw-dropping drop of 33.4 percentage points. The market just left them behind.
It did. And what's fascinating here is that the sources, they don't just blame the products, they point directly to institutional failure. They connect this decline in part to the leadership crisis after Carlos Ghosn's departure.
Right. Ghosn was seen as the big EV champion.
He was.
But how does one executive's departure lead to a 33-point collapse 5 years down the line? I mean, that feels like a stretch.
Well, it wasn't just about his personality. It was about institutional priority. With Ghosn gone, the momentum stalled. The resources that should have gone to next-gen dedicated EV platforms, they were diverted.
But diverted where?
Into more profitable, short-term hybrid and combustion engine projects. They lost their focus, they went slow, and the market just accelerated away from them.
And that created a vacuum.
A massive vacuum, which others were more than happy to fill.
And here's where it gets, I think, even more interesting. You might expect a legacy automaker to struggle, but even Tesla, a pure-play EV producer, suffered a huge loss of relative dominance in Europe.
This is maybe the most counterintuitive piece of data in the whole stack. Tesla dropped from a high of 22.6% down to an estimated 7.7%. That's a nearly 15 percentage point loss.
So Tesla had the head start, the brand power. Why did variety and volume from the traditional groups beat them so easily?
It suggests the pioneer advantage is great for capturing the early adopter, but it's almost worthless with the mass market. Tesla kept its focus on a handful of models, but the traditional groups, they just leveraged their deep brand loyalty and offered a vastly wider range of models.
So when the average family went looking for an EV.
Exactly. Suddenly they had 10 choices where before they maybe had 3. And that variety was just an overwhelming weapon.
And just quickly, we should note, BMW also declined significantly, from 16.6 down to 8.8%.
Yes, and that was a strategic hesitation. They waited for the perfect dedicated EV platform instead of moving quickly.
That delay was costly.
Incredibly costly. They were sitting on their hands while others, like VW, were already deploying at scale.
That sets us up perfectly. So we shift from the declines to the spectacular resurgence of the traditional giants. The success story in Europe is really dominated by one group.
That would be the Volkswagen Group. Their growth is the mirror image of the Renault-Nissan collapse. VW Group moved from a tiny 6.6% share around 2017 to dominating the entire market. They're projected at 29.6% by the end of 2025. That's a gain of 23 percentage points.
That is just explosive. How did they pull off that kind of reversal?
It was driven by massive, aggressive investment in dedicated architecture. And the sources, they really highlight this as the core difference. They fully committed to what they call the MEB architecture.
Okay, MEB. Let's quickly decode that for you if you're not living inside EV strategy every day. What exactly is it?
Right. So MEB, it stands for Modular Electric Drive Matrix. Think of it like a standardized battery skateboard or foundation.
It's a cost and speed advantage.
Exactly. The genius of it is that it allowed VW to standardize the core engineering across all its brands, VW, Skoda, Audi, and apply it to dozens of different models. It dramatically reduces the cost and time to get unique models to market. So they flooded the zone with the ID series, the Skoda Enyaq, the Audi e-tron.
And they use their existing brand trust to sell them.
They did. They overwhelmed the competition.
Now, the runner-up success story is Stellantis. They started small, around 2.75%, and grew to 8.6%.
Their story is all about synergy. Growth came from volume models like the Peugeot E208 and the Fiat 500e. They benefited massively from the post-fusion efficiencies, electrifying their popular small cars on common platforms. It was very smart.
And now, looking to the future, we have to talk about the entry of the Asian players.
Absolutely. This signals the start of the next competitive era. We're specifically looking at Geely. They control brands like Volvo and Polestar, and they started at 0% share and are now projected at 6.6%.
Growth from absolute 0 to 6.6% that's incredibly significant.
It is. It proves the speed at which capital and competitive platforms can be deployed. It's a clear signal of sustained pressure from Chinese-backed groups.
And we should briefly mention Mercedes. They grew solidly from 3.3 to 5.9%.
A different path. They focused on the premium segment with their EVA platform for cars like the EQS and EQE. They're defending their high-margin territory.
Okay, so we've covered the headline numbers. But the sources reveal a fascinating layer of complexity when you look at individual markets. Let's contrast Italy and France, because local conditions really change the game for you, the consumer.
They absolutely do. Italy, for instance, it largely follows that broader European trend of VW dominance. The VW Group currently holds about a 25% share in Italy year-to-date 2025, driven by the ID.3, ID.4, the Cupra Born.
And Renault's struggle is really pronounced there.
Oh, it's a hard crash. They dropped from, 15 to 20% back in 2020 down to a desperate 4 or 5% now.
And the sources say it's model delays and less competitive batteries.
Yes. And that opens the door for the Chinese rivals. In Italy, BYD and Geely together now hold about 15% of the EV market.
15% for new entrants is a huge slice of the pie.
It is. And it's because they are so aggressive on cost, they often use LFP batteries,
LFP.
lithium iron phosphate. So they're a bit heavier, a little less range, but they are dramatically cheaper to produce.
Which lets them undercut European prices.
Exactly. In a price-sensitive market like Italy, that's a game changer.
So in Italy, we see VW scale winning and Chinese cost-cutting gaining huge ground. Now, bring that to France.
France is a unique case. It's highly EV-friendly because of those big government incentives, 4, 5, even 7,000 euros per purchase.
And that acts as a kind of protective barrier for the domestic brands.
It does, and that's why Renault resists the collapse better at home. They're holding about a 12% group share there, led by the Megane E-Tech.
And VW is weaker in France.
Much weaker, only about 10%, which is low for them. Even Tesla collapsed there, from 20% down to 8%.
So the insight is that VW wins on scale across Europe, but Renault holds its home turf, thanks to those incentives.
That's the story.
So, what does this all mean then? We've analyzed incredible volatility, pioneers cast aside, giants rising up. What's the fundamental long-term shift that's underway here?
Well, the big one is market fragmentation. That's really the key takeaway for anyone trying to get a handle on the future of this industry. Years ago, the top 8 automotive groups held nearly 100% of the EV market.
And now?
Now, by the end of 2025, that same top 8 will cover only about 80%.
That 20% difference is monumental. It means 2 out of every 10 EV sales are now going to new players.
Exactly. New actors, Geely, BYD, other Chinese brands are successfully eroding the historical control of the titans.
Which raises the big question. VW and Stellantis just won the first phase, the Roman platform war. Can they sustain that momentum?
It's going to be very, very difficult because the environment is hardening immediately. The new pressure point is intense, continued price pressure.
Driven by Tesla and the cheaper Chinese models.
Right. And that is going to seriously stress the margins of the traditional groups.
The margin they use to fund the MEB architecture is now disappearing.
Precisely. And that's why the battleground is shifting again. The market has moved from being dominated by battery duration to a dominance based on model range, the VW era.
And what defines the next phase, the one starting right now?
The efficiency of cost and global scale. That's it. Success will depend entirely on deploying second-generation dedicated EV platforms.
Like VW's future SSP platform.
Yes, the scalable systems platform. That's VW's strategic response to the price war. It's designed specifically to slash production costs far below current levels.
So VW won the first platform war with MEB by focusing on how fast they could expand their range. Now they have to win the second platform war with SSP by focusing on how cheaply they can produce those cars.
That is the entire game. Any delay in implementing these platforms risks repeating the fate of the Renault-Nissan Alliance. The penalty for being slow is irrelevance.
What a fantastic summary. The European EV market is a hyper-competitive battleground where legacy advantage is worthless unless it's paired with aggressive platform investment. VW won the first phase, but the Chinese push and the drive for cost efficiency are already changing the rules again.
They are. The groups that rose to dominance built their success on aggressive range expansion and brand loyalty. But given the severe price pressures, we have to ask you, does brand loyalty, does all that model variety, does it ultimately matter less than a raw commitment to absolute low-cost scale?
That is the defining strategic choice facing every major automaker right now. Something for you to consider as this next round of incredible competition begins. Thank you for joining us on this deep dive.
Yes, thank you. We hope this has provided you with the necessary clarity and knowledge.